Good morning, everyone. It is Monday, and today I just want to thank Mike and Adam for this nice Vista Shares hat. It looks pretty good. Thank you, gentlemen. Reach out to them if you guys want some, a nice Vista Shares hat. The quality is fantastic. Okay, this video is not sponsored by them. I told Mike that I would absolutely have to wear the hat in the next video. So that's what we're doing. So what's going on in the world? The president came out this morning and said that there's great progress to be had. Market's green. It's not really what I wanted to focus on though. My focus on this video is going to be ETF swapping. Okay. So the idea is you want to harvest, right? So let's zoom out. End of 2026. We're in December. We're up 20% from where we are now. If you guys go back last year from, April to like the end of year, massive dip and recovery, ridiculous. Are you going to be in that position? There's probably a good chance, judging by the way things are going. Okay, there's going to be a huge run on assets here soon when this whole thing overseas flips around, because we are printing money. We are so in debt, it's not even funny. The dollar will have to crash because we're going to have to print more and lower interest rates just to get out of this mess, because our debt to GDP is like 130%. Okay, it's a really, really bad position to be in. So how do we want to capitalize on this, really, right, is the question. If you are long the total, it could be any index, really. We'll do ETFs as well. If you guys comment below, let me know if you guys want me to do break this down into other categories, because I actually have a list of those, but the video would take too long and most of you would just not watch it. Today we're gonna focus on the index. Okay, we're gonna look at tax loss harvesting, because again, if we're thinking in our mind this thing's gonna spin around and we're gonna be like up, okay, we want to harvest some of this loss without giving up our position. So that's what I'm going to show you how to do. I'm also going to show you how to average down your cost basis on a two-directional plus tax loss harvesting. We're going to lower our beta exposure without giving up our upside. That's the point of this video. So let's get into it, and I'll flip this camera around and I'll show you on the whiteboard. Yes, I brought the whiteboard out just for this. All right, my trusty whiteboard. All right. So I made a list. I'm going to get my, like I said, I have a long list. I have a long list of dividend ETFs. I have a huge list. Okay. I came up with this list. These were the most talked about ETFs on social media. So essentially everything in this line trades the same underlier. S&P, VTI, ITOT is the total market, QQQ, QQQM, it's Qs, VEA, SCHF, SPDW, that's the FTSE, VUG, IWF, SCHG, that's your large caps, IEFA, EFA, VEA, these are your internationals, VTV, IWD, IVE, these more large caps, GLD, everyone likes gold, IAU, I actually had never heard of this one, but it's probably the best. It's the cheapest out of these three. GLDM, these are golds. So depending on what you're doing, and so what we're looking at here is, we'll go over to here, this blank section. All right, so say you own VU, right? And maybe we're down on VU, and you're like, I really want to hold the S&P long term, but I want to capitalize, I want to make some money off this trade. How do I go about doing it and maybe repositioning? Okay, we can swap VU for IVV or SPY and basically get the same, right? So maybe we're, I don't know, maybe we're down 10 grand, okay, on VU, but we want to hold this long term, okay? We could sell the VU, okay, or the IVV or SPY or whatever it is. You're interchangeable, and that's the point, okay? And we can buy the SPY. So remember, I don't know, say VU's at, I don't know, 300 and the SPY's at 200. Price doesn't really matter. What matters is your percentage on your money's returned to you. Price is irrelevant. It doesn't matter whatsoever. It's what percentage points are you actually making on your money invested, okay? The price could be 3,000, but if you're making, 2% on 3,000, it wouldn't matter. So if we were to sell, okay, capture tax loss harvest, okay, and I'll explain to you in a minute why this is important. And then we buy the SPY, our position is exactly the same. So if we have, I don't know, $10,000 over here, and we have $10,000 over here, our position is exactly the same. Our share count might be different, but we're trying to capture the down with the up. How this works, if you have big money, as at the end of the year, you might do like self-indexing. This is for people like with accounts that are over, like 600 grand. And basically you'd buy the entire market. Replicating like the SPY or VU or whatever, you'd buy the entire thing like equally weighted, and then you would just sell off the losers. At the end of the year, and that would actually give you a slightly better percentage return on your money. But if you don't want to do that and you want to take advantage of the dip right now, you could swap your positions. Okay, so you're going to capture your tax loss harvesting, okay, without giving up your potential upside. So you're just going to move the money into something like this. So when the market does rip, you capture that upside. You can hold on to this if you want. That's not a problem, okay? But you forego the tax loss harvesting. And there's not a professional trader on this world who isn't going to take advantage of that. So let's look at this again. So maybe this is actually super popular with the Qs because it moves so much. If you own the Qs and you're like, hey, I want to capture some of this, you could buy QQQM and you don't give up your upside. It's the same thing. Okay? When you take that tax loss harvesting is going to actually add a couple percentage points, believe it or not, to your total portfolio at the end of the year. Because you don't want to pay Uncle Sam. Paying taxes sucks, okay? It's one of the biggest, a lot of people don't realize that's probably going to be your largest expense at year end if you're an options trader, okay? So take advantage of this. Everyone's getting to options trading right now. Take advantage of this because I just got my tax bill and it is ridiculous. All right, so do you guys understand this? Great. Let's improve on it just slightly. Okay. Because we're gonna make this a little bit better. Really above and beyond for you guys today. Because I'm just that generous. All right. So you're gonna take advantage of this. because you're just a rock star, superstar. But I have one saying that I live by that I kind of made up. Do not take a trade unless you're getting paid. Okay. So you do want to take advantage of this. You want a tax loss harvest. Covered, call it. This is a sell call, in case for anyone who isn't familiar. At the money. Let it get taken away. Do not try to save it. Do not try to play captain save an ETF, okay? Let it get taken away. Because you're doing this anyways. Instead of selling at the price, get paid to sell it. Collect some premium, right? If you're at 300 and you get I don't know, $5 in premium, okay? Well, that's great. Now your cost basis is $295. Fantastic. Wonderful. Okay. And then you're going to buy the SPY anyways. Sell a cash secured put. At the money. Get assigned. Take it. Okay. So now what we have is we have tax loss harvesting. We didn't give up our upside. And we collected more premiums. Okay? You can't get better than that. You really can't. And that's basically the premise of this video. Let's start being thoughtful about how we're going to take the trade. Let's look at the chart again. Now again, these are all, you can swap any one of these. If you guys own SPY and you want VU, or you have IVV and you want SPY, whatever. VTI, ITOT, the Qs, VEA, SPDW, you know, a lot of companies all trade the exact same thing, okay? Where was my book? All right, so here is, I have a video coming up with Hector. Here's some more. SCHD, FDVV. I wrote them down last night. JEPI, you can swap for SPYI. It's a covered call. VIG, VIG, SDY. JEPQ can get swapped out for QQQI. FDVV, SCHD. VYM. This is broad exposure. There actually was no swap I could find. Devo, it's a covered call plus growth. They like handpick their companies. There's nothing really that was a good swap for that. And again, SPYI, I wrote them all down, swapped them out, and then this is just the SPYI, JEPI, QQQI, JEPQ, SDY. These were super popular. Why is this important? This video here was important because there's a lot of people, especially on X, that are just coming into options selling. The entire options universe was sold. It was a bag of goods sold to traders on how to buy call options, okay? And most of them have failed beautifully because they only understand one directional side, and they're getting sold a bag of good from like these prop firm traders who aren't actually using their own money, which is unbelievable that people pay for this. So now people are coming into like covered calls for the past 2 years. Obviously, they started back in 2006. I understand that. But really, the past couple years has has really taken a new weight on this. And a lot of people were just kind of like, maybe I can do this myself. Obviously you can. So now selling options has become immensely popular. What people haven't, and really been over the past like 6 months for retail traders, what people haven't experienced is the tax hit. Okay. If you made a ton of money, especially if you're doing this like professionally and like this is like your livelihood, if you made a ton of money in 2025 selling options and you just got your tax bill, which is due here really shortly, how the market's down. Are you going to take money out of the market, out of your portfolio to pay your tax bill? It's a pretty big tax bill. There's a couple people who, yeah, sure, they put, they put the 30% aside. Dividend Millennial does it. He puts the 30% aside to pay the Uncle Sam, but most people aren't doing that. They're not. So why is something like this strategy important? Because it's going to reduce your overall tax bill in the long term. You gotta think further out. What's the end of the year look like? Like, we've just been getting just absolutely smacked in the face. Okay, we still have to drop interest rates. Okay, when we drop interest rates, equities will still go up. Okay, we're printing more money than ever. We can't pay our debts. Literally, the Treasury has come out and said that the United States is completely bankrupt. It's coming from the Treasury. They have to refinance those rates. Okay, the dollar's going to crash. Okay, the oil trade thing is going to come down. The end of 2026 is going to be incredible, and you're going to wish you did this. Again, you're not giving up your upside. You're just swapping like for like. Okay, if you're trading the exact same position, it doesn't. And you can do this with, your 2x funds, your 3x funds. You can do this with any ETF you have. Single stocks, it becomes an issue because obviously you'd want to, if you have Apple, you don't want to necessarily sell your Apple and go buy an Apple ETF. You can, you give up your voting rights, that's neither here nor there. This is really more so for the ETF crowd, where you have so many companies that have the exact same ETF underlier, and you could capitalize on this. Things are going to change and things are going to flip overnight, as you guys have noticed. If you guys have been trading, you've been paying attention. When it does, you're going to wish you took advantage of this moment. So think long term. Don't think just now. Don't look at the 5 hour, 5 minute, 5 tick, whatever. You really have to be forward looking and zoom out, because things go up. And this is just another great strategy. And if things reverse, if things go back up, right? And in 6 months, you're like, I want out of the SPY and I want back into VU because it's going down. Great, do it again. Sell a covered call at the money, get paid to take it. You get, those percentage returns of tax loss harvesting is going to be great. Taxes is NAV erosion. If you have to remove the money to pay the tax man, that's gonna look like NAV erosion in your account. Think of NAV, your net asset value, is your account balance. Okay, it's everything. It's not just one ticker. It's everything that's in your basket of portfolio. Okay, so if you got to pay the tax man out of your brokerage account, that's gonna look, smell, and feel like NAV erosion. But it's on your personal bank, on your account. Okay, so think about that. And it's high. The tax rate's super high. So if you can take advantage of these small opportunities in time to be more thoughtful, more pragmatic about your investing future, you have to do so. Okay, don't just give it away willy-nilly. Don't be like everyone else who works from January 1st to June 1st for the tax man. Because that's it. And I hope you guys enjoyed the video. Again, if you guys want more of these, let me know in the comments, or if you have a particular ticker that you're looking at and you're like, hey, I can't find, the correlated swap for this ticker, let me know, and I'll see if I can help you out. Okay, I'll see you guys later. Take care.